Hi everyone, welcome back to my channel. Today I have another recap for you on how I traded SPY and ES on September 2nd, 2022. I picked this day because I wanted to talk about how I was able to confidently short the top to make some incredible gains, which isn't something I typically recommend doing. Pulling this off with confidence required a combination of price action, volume, and market net flow. Before we get started, if you'd like to get a 10% discount for TradingView, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Elite Funding and Trader programs that will give us both discounts. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. So before we get into the intraday trading, I just want to draw your attention to the daily chart on SPY. So let's flip to that real quick. There's some important things I want to point out here in terms of price action. So as many of you know, we've been in a bear market and a big downtrend on the daily since January 4th, 2022. And we can see every time we've approached this trend line, we've held it. And most recently, we held this trend line on August 16th, 2022, which also lined up with the 200 period moving average. As you can see here, I'll pop this on my screen. And this ended up being a really big hold, which not only was right in line with what we saw before in terms of the previous high points of the bull rallies, but also the 200 moving average. And on that day, we had a massive rejection, which helped resume this bear trend that we've been having. If that had broken, then chances are we would have officially been back in an uptrend, and we probably would have been seeing a lot of good news about how the markets are doing and things of that nature. But because of this was also right before Jackson Hole, and that was coming up, and so I mean it was already assumed that we'd get that there'd be some hawkish outlooks there, and we get a big drop. But now that that's already happened, you can see now we have this downtrend below us that's actually been holding, and we can see when we came to it on September 1st. We held that, and we had a little bit of a bull day, nothing crazy, but we did get some support there. And then even on September 2nd, the day that I want to get into, when we came down and touched it, we actually held it as well. So I did check futures, and just to go to the daily chart on the futures, I didn't trade them today because today is Labor Day, it's a holiday, and I don't like really trading on holidays because of the low volume stuff, and it's just usually a good idea to stay out of it. Plus I wanted to spend time with my family and whatnot. But you can see now I don't have the trend line drawn here, but even if I do draw this trend line, we actually did still hold this trend. And let me just zoom in there to make that more visible. We did actually still hold this, so that this uptrend that we have that form, which actually is part of a bigger bear flag essentially, is still holding. Now I'm fully anticipating that this is going to break, and when it does, it's going to make for some incredible shorts. Most likely from a daily chart perspective, we're going to break it, come back, retest it, and then just proceed with falling, at which point we want to watch for major support areas where we've had them before. So around 37.26 is one of them. Of course, the previous lows at 36.43 roughly, and then we'll have some other areas in there. And just make sure that that every single day you're always prepping by looking at the daily chart, looking at where we are in relation to past price action, and make sure that you draw key levels. Like especially right here, we can see we have a key level, and I'm just pointing this out quickly. This isn't everything we want to concern ourselves with, but this is something we can look at where we held 1, 2, 3 times. And we did eventually break it, but then we still held this trend and pushed higher. So as we come to these levels, we just want to make sure that we're prepared for that we mark those on our chart in advance before we do intraday trading, because we need to know, and it's usually good to color code them, we need to know when those levels are coming up. So back to SPY here. Now I personally traded SPY and ES because the fall was just, I wanted to make sure I capitalized on it with both my options account and my futures account. And I actually did already plan on shorting SPY that day. Now, because the little green day we had just wasn't anything significant. You can see here when we touched it, we did make it past the low of the previous day, but we didn't really have a lot of steam behind this move. So I was anticipating that we'd be moving down at some point. Of course, no one knows exactly when. But some other things that gave me an indication that we would keep moving down was when I looked at the TradingView dark pool summary for SPY, and without even using the correlations, just by looking at the sentiment, the block trade sentiment going into September 2nd. So this would have been September 1st. We could see that there was a lot of bearishness going into the day. We can see that the dark pool sentiment just continues showing more and more bearish, which are all good signs that it was going to be a bearish day. And then now I'd covered the dark pool correlations in a different video, which talks about, just helps us identify some of the volatility that we would expect that day. And then on top of that, just looking at the dealer positioning dashboard, which I haven't covered yet, I will cover this in a video very soon. This also gave an indication that we would have a bearish day. So anyway, once the day started, we did actually start out with a bull move. And I want to talk about this here now. This, I didn't actually get to trade first thing in the morning. I actually have started a new job and was in some meetings. So I am able to keep an eye on things, but I wasn't trading this. And initially, even though when we had this big drop, it's very rare that we just drop and continue falling. Usually, even if we're going to have a bearish day, we will get some sort of pull up and then from there move lower. And the same thing, if we're going to have a bullish day, we'll have some sort of fall and then move higher. So essentially what happened here was we started dropping. Then we were met with some support right around this area, which we can see by these candles, these wicks to the downside, and eventually this pushes us up above the VWAP here. And one thing I want to point out as well is that even though this is a very small candle, this is a good indication of a reversal candle, because despite its size, it still had some decent volume. And this actually does show up better on ES, which is one reason why I actually prefer to watch ES when I'm trading, because, and this was all of the Labor Day stuff here. Let me just get back to where we were, because it does give a better indication of volume oftentimes. I mean, there's not too much of a difference here, but we could see we did have this small candle and we held with 3 wicks to the bottom and we push higher. And so at this point, things are looking good. We get a healthy move through the VWAP, which would have actually been a decent long, on top of the fact that when we broke this level right here, and this is one thing that you can do, is make sure if you don't have these levels on your chart that you're marking them as we move higher. So as we broke above here, this, and then we came back down, this actually would have been a good area for a limit order entry, or just taking an entry once we continued to hold here for a few candles. And then we start making new highs, and then this is where it starts getting interesting. So it looks like, so we made a top right here. So this is something we would certainly want to mark on our charts. And this is actually higher than I anticipated that we would go for the day. We actually did break above 400. 400 is sort of a line in the sand. And when we immediately fell through it, I thought for sure that we wouldn't get back above it, but we actually ended up getting above it. And then at that point, just to mark it so we have it on our chart so we know where it's at, knowing that it's an important level. The important levels, the psychological levels, are also levels where we typically have a large amount of options positioning centered around. And just taking a quick look at, let's take a look at SpotGex here, which is a fantastic gamma exposure tool to let us see this sort of stuff. We can see that most of the time, now in this case, since we've already sort of moved past it, it's not going to look that significant, but you can see, I mean, in relation to other areas where we have negative gamma, 400 is indeed bigger than most of these other areas. So, and this was actually much more significant on Friday. Unfortunately, I can't show a historical view of it. But so anyway, so we have 400, and then we actually end up pushing all the way up to roughly 401.54. But this is where I want to point out how we can use our price action and volume to get an idea of that a fall is going to happen. So one thing I want to point out as well is that market net flow in this case was bullish, which is in line with the move. So when we had the initial fall, net calls and net puts were very close to each other. Now, if you're not familiar with market net flow, I did a whole video on this. Make sure you check that out. It's sort of an ultimate guide that it breaks everything down. And then we move higher, and we see calls and puts are completely in line with that. And one of the new features I love about market net flow is actually this convergence button. And this button shows us down below when SPY's price action is in line with what options flow is telling us. So we can see here when it's gray, that means things are divergent. That means calls are above puts, yet price is actually moving down. As soon as price starts moving up, we can see down below everything becomes convergent. So we have calls moving up, calls are above puts, and prices moving up. Things are convergent. This is actually a good time where you could take a call position just purely using market net flow and essentially hold it until we see an indication to get out, which I'm going to talk about here. So we have that showing us that the day's bullish for now. And essentially what's happening is you can see we touched 401.54, and then when we tried to get back up to it, we couldn't get back up to it. And every time we try to get back up to it, we actually have a rejection on higher volume here. And this is actually sort of, this isn't fully an engulfing candle. It's about the same size as little shifted, but this is another nice rejection sign that we can see here. So we're pushing up and volume's increasing, and then all of a sudden we get a hard rejection. We get another hard rejection here. And these are things we should all be paying attention to and always thinking about. As we're trading, it's very important that we form a thesis in our mind. So we have key levels in our mind. We're looking at the price action, trying to make sense of what's happening. So yeah, we had this push up, but the fact that we're getting stuck here and then we can't get as high as we were before, and we keep seeing these rejections, is a sign that we probably won't go much higher for the day. So at this point, while this is playing out, we should be thinking about how we want to play this. And just to give an example, the way I was thinking about playing this at the time was, if we get above this level, we break above it and retest, I'll go long, which I didn't feel as comfortable with because of all the sentiment stuff that we just went over. But also at the same time, I'm not going to sit there and go with my bias, because and I altogether try to avoid having bias, which is why I always try to form a bull thesis and a bear thesis in my mind, because I need to figure out how to play it if it doesn't go with the one that I think it's going to go with, the thesis that I think it's going to go with. So with that being said, as this was playing out as well, we could see calls were diminishing. Now, puts were also diminishing. So just going with the thesis, my plan is, okay, if we break below 400, then that's a cue to get into puts. And if we break above and retest 401.50, then that's a cue to get in calls. We don't want to try to trade this in no man's land. And I say that, but at the same time, I broke my rules, and I'll talk about why that is shortly here. And just for full disclosure, so right here, when we started hitting this top, and let me just let this play out a little longer here. Okay, so this was when these candles were forming and we were getting these dojis, and once again we were still failing to make it back to this previous high. We couldn't even get back up to 401.50. This is the point where I decided, and again I was trading ES, so I decided to do a limit order right up here, and then my stop was actually above 40.20. So my limit order was right around 40.15.50, and then my stop was at 40.20, because I always want to give myself enough room in case they try to stop hunt or something of that nature. We get a quick burst in a bullish candle. I don't want to get taken out because of that. And the reason I felt comfortable doing that is because we saw market net flow starting to look more and more bearish here. It was a chop zone, and it just looked like price couldn't, the buyers couldn't take us much higher. There actually weren't a lot of buyers. We can see this is a very low volume area, and then we keep having all these higher wick rejections. So I was very confident that we weren't going to go much higher. Now that being said, I had no idea how hard we would fall. So my first take profits was going to be the 400 level, and then my next take profits would be the VWAP. And so let me just let this play out so we could talk about this fall that we end up getting, and how, and actually one thing I should mention too is, personally, now I do not recommend this for most people. I think the 3-minute is fantastic for all traders, and I love the 3-minute chart. But recently, just because I'm trying to train my brain, train my eyes for it, again, I don't recommend it. I can't recommend it with confidence, but I have been using the 1 minute, and it does give me more detail, but it's also even more important to think about where we're at on the chart at all times. And another tool I've been using on that 1 minute is the 9 EMA, because what happens is when we get these big impulse moves, I don't use that as a level, but you could see here, this is a perfect example of it. So, well, excuse me, I only use that as a level. I don't use it for crossovers or anything like that. And this is a perfect example. When we had this big hold and we started moving higher earlier, you can see what happens is, as we break the 9 EMA, if it's a strong trend, we actually hold that 9 EMA on the 1 minute. And you can see this was actually breaking a retest of a level, but it was still in line with the 9 EMA. indicating that this trend was still viable. And so what we can do is when we enter in, so say if we enter in at this level hold, and I'm also going to mark these levels so we have them on our chart as we proceed here. But as we break the 9 EMA, so we get above this level and we hold, and let's say we enter here, we can use this as a close below the 9 EMA as an exit point. Now we wouldn't use it here because again we still hold this level, and let me just bring that a little more in line with the actual wicks and candles, and that way the more wick touches we have, that's what I aim for when I'm drawing my levels, is to make sure, so we have 1 2 3 4 5 wick touches here. So that's how I try to get my levels more precise on the intraday and daily time frames, intraday, daily, and 1 hour. But so this still isn't a reason to get out. Now if we had broke this level we could, but then again as we push it we hold the 9 EMA, we push it, we hold this level, we keep holding the 9 EMA, and then it isn't until all the way up here that we break that 9 EMA with a candle close at 10:46. So if we had entered longs or entered calls here, we could have held it that whole time using the 9 EMA, which is what the reason I added this to my charts. And now the same thing happens here. Even though I was confident in taking this short because it was in line with my bear thesis and that we weren't going to get above this level, once I did enter, again I'm still looking to take some profits off at this level and then again at the VWAP. But my goal is to try to hold my position as long as I can, my runners at least, until that 9 EMA on the 1 minute breaks. And it doesn't have to just be a 9 EMA. We can also use a 21 EMA, especially if we get a big bear move, which I'll just add on the chart so we can look at how those react while we're doing this here. So let me just get rid of one of these here and do 21 EMA. And that will be our blue line here. And I'll just make this a little bit lighter color so we can see that better. I'll go with light green actually. And then so that way if we get a huge move, even if the 9 EMA breaks, as long as we're in profit, we're in significant profits, we can even use the 21 EMA as an exit point. So when we get here, take off some of the position, but yet it's still looking super bearish. And right here it holds this 9 EMA, and we can see we're still getting pushed down, and also these all of a sudden the volume's ramping up, which is also something very important to pay attention to, which we can actually see in greater detail on ES. We can see this was volume ramped up significantly during this period, which means now sellers are really stepping in. And on top of that, anyone at this point, not quite yet, but eventually it's going to get to a point where anyone that was in longs or in calls is going to be forced to close those out, which will just help fuel the push down. And then another interesting thing is when this fall begins, I mean, my market net flow essentially called the top. You can see right here, we get more divergence. We're no longer converging. We get these gray bars. So this would be another point where if you're in longs, you would exit them. Or if you're considering getting in shorts because you were seeing the same thing that I saw where the price action was looking very weak, that we weren't going to get push higher, it's just more confirmation to enter in puts. I wouldn't use it I wouldn't just use market net flow, divergence, and convergence, but it is a fantastic indication of confirmation of what we're already looking at. And so again, as we get to the VWAP, this is where I wanted to get out. And I actually, because I'm trading futures, this actually is the point where I did get out, but immediately what happened, we just broke through so hard that, and then we come up and we retested on this candle, and it happened very quickly. But when I saw this retest on this candle and this high volume doji indicating that there was a battle going on here, I decided to get back in with a stop about 4 points on ES above the VWAP. And then I'm so glad I did, because we just get this massive fall. And at this point, getting very exciting. Profits are just ramping up. We're getting more indications on market net flow that bears are taking over as puts proceed to cross calls, which is huge. And then price just continues dropping. And at this point, when this happened, as we're just breaking these levels without much resistance at all. I mean, you could see whenever we do come to these prior levels, we do resist for a little bit. But at the same time, we still hold that 9 EMA. We never actually close above it. So even though there were times where it looked like, based on some of the strength of the candles, and let me just zoom in right here, like this, even this is actually a bull hammer on low volume, so that's not as concerning to me. If this had been a bull hammer on high volume, that normally would have been an indication for me to close up the trade and take my profits. However, in this case, because it's such a strong trend, my indication is going to be when we break the 9 EMA, and then if we get enough distance in between, I still won't close the full position. My goal will be to only close part of the position and hold the rest until we break that 21 EMA, in hopes that it will continue going lower, especially when we see this indication where we see puts just skyrocket. And this happened at 1:30 Eastern in the afternoon, which we weren't quite there yet. But let's see how this keeps just playing out. We just keep dumping and dumping and dumping. You can see we're still holding the 9 EMA, which is also in line with the levels. And that's why I want to stress it's important to still use everything that we use in terms of reading price action, getting our levels on the chart, prioritizing that stuff. The 9 EMA, in my opinion, and the way I'm using it, is purely just a way to help me stay in strong trends for longer. And it's really difficult to do when you see your profits just racking up and you have in the back of your mind, you know, what if it's going to turn around and flip on me? And it's just a visual cue you can use to keep that emotion out of it. And you have something, a tool that you could say, okay, unless this breaks and we close above it, that's the key point, because sometimes wicks will break above it, like in this case, but then we immediately reject. And also, you can also use it as a way to get in the trend. So let's say we take this level break, and hypothetically, we say we have a limit order at this level for a retest, and we barely miss it, which happens. Sometimes I'll miss a retest by like a tick or two, yet I don't want to miss the move. Well, what we can do is we can wait for the 9 EMA to get tested, and as long as we hold, like we see here, then we can mark it in shorts. It's just another way we can help get in shorts, and those are the reasons I added it. I'm still using volume profile, I'm still using price action, levels, volume, market net flow, but that's the other way. So right here, we do actually break this, and this is the cue to close up in the majority of the position, but I still decided to leave runners on because we didn't get above this previous level, and we're still holding that 21 EMA. And then we get a lot of confirmation as the move just continues down and continues down, and it was just a heck of a day. And at some point when we do start to stabilize here, I'm thinking, okay, where can I add more positions? So at this point, I close them off. I close off all my positions because now the 21 EMA broke. We immediately fall below it, and at this point, it's a matter of trying to figure out how we can get back in this. And that's what I want to talk about, is that when we see this happen at 1:30, where we see push just skyrocket well above calls. At this point, we don't want to act immediately because price doesn't always react immediately. But now I'm trying to decide, okay, I need to find a place to get back in. And another thing I always make sure I do as these are playing out, if we don't already have the levels, make sure that we mark them on our chart. Because if we do come back up to these levels and they do get retested, and then of course on volume profile, I love using these volume gaps. Make sure you check out my volume profile series where I talk about that. They always coincide with the important levels. You can see here how we have all this volume that was traded in this area, and this actually does help us identify these levels. And we do want to line it up with price action, of course. And we can see that as we get into these volume gaps, this is where participants will fall off, and then typically when we're in a trend like this, the trend will indeed continue. So when we get that big put indication that puts essentially this means everyone across the market is buying puts at this point, and the reason being is because we're coming into consolidation and it's time for people to load up positions. And so this is exactly where I decide to actually get in my position. Now I do kind of sort of get in a little early off this 21 EMA, and my plan was, if I needed to, I was already so high in profits that I was okay with it, that if I needed to, that I'd hold above that level if I needed to. And sure enough, we just fully break down and we continue going. And then it's the same sort of deal as we create distance. If we close above the 9 EMA, I'll exit some of my position. If we close above 21, I'll exit the rest of it. And we could see that eventually that does happen. And now we're starting to get later in the day, and we could see that we're hitting bigger and bigger levels, which we could also see historically in higher time frames which I'm not going to cover here. But those are the main things I wanted to talk about. How even if we're not in the trade, areas that we could how we could work on getting in the trade when these big moves happen. And that's why I wanted to talk about those EMAs, but also how we could have confirmed the top, not only with the price action and the volume, but with market net flow, convergence, and divergence, which is a fantastic indicator. And so between those things, I was able to get in the move very early, hold through most of it. There were certain points where I would exit the trade, wait for a good point to get back in using the EMAs or levels on it, and then re-enter the trade. But it was just an extremely profitable day. It was huge for my portfolio. And just as I mentioned before, as we start getting into this bear market continuation coming off of this bull rally, I'm really watching for this trend line, and I wanted to point that out because hopefully you start watching for that as well, because that should be a significant break if that happens. So anyway, I hope you found this recap helpful. As always, if you have any questions, please let me know. I'd be happy to help, and thanks for watching.